The Bangko Sentral meets this Thursday for that rate hike discussion, and a 25 basis point cut looks like a done deal. Inflation dropped to just 1.3%, the lowest since 2018, and global banks from Goldman to Deutsche are now pricing in back-to-back easing starting June 19th. But as markets got comfortable with that narrative, new risks have emerged. The peso closed Friday at 56.21, its weakest in 6 weeks, as escalating tensions between Israel and Iran triggered a flight to safety and sent oil prices surging. This comes as the current account gap widens and domestic growth still struggles to gain momentum. So, how much room does the BSP really have to ease? And more importantly, will it be enough to shift sentiment and reignite investor confidence? Joining us this morning is First Metro's research head, Cristina Ulang. Hi, Cristina. Thanks for being here with us.
Hi, good morning, Mimi. Thanks for this opportunity.
Oh, you mean Mikey. Mimi's the other show.
Sorry. Sorry,
okay,
Mikey.
you talk to so many of us. It's okay. So, Cristina, a new geopolitical risk has emerged, the tensions between Iran and Israel. Initially, the market had priced in a 25 basis point rate cut this week. But given the intensifying conflict between Israel and Iran, could the BSP go bigger, or would that be too risky too soon?
I think they're going to go with like 25 basis points as widely expected by the market because there is this new layer of uncertainty on top of what we're already seeing, this trade war. Now we have a physical war. It's actual military conflict between Israel and Iran, and we don't know how long is this going to be the drawn out battle. Is this going to be because the goal is some kind of a strategic, and some people are saying it could be regime change, it could be the dismantling of the Iranian nuclear facility. So it's going to take a long time because the Israel were said to be not having the military weapon to actually do the dismantling of the nuclear facility. So this may take a long time, but on the other hand, some people are saying it could be a negotiating tactic in the same way that the high tariffs were used to put other countries and enemy states on the defensive. So this is going to put the Iranian government on the defensive, debating whether to attack aggressively as they have attacked. But the question is to what degree will it involve the U.S.? Will this escalate? So there's so many uncertainties here, so many unanswered questions, and so it's a bit of risk off for seeing to say lower. And so I think the BSP is going to be also very conservative, but is still proceeding with the 25 basis point cut because government is borrowing. We need lower interest rates. We have been at the very high end of our real yield. We need to grow the economy, of course. This is a pro-growth initiative, cutting by 25 basis points. And I think more needs to be done, as the BSP governor has said, more triple R cuts and more rate cuts on the table. The top priority now is really growth, growth, growth.
Yeah, the developing risk between Israel and Iran is, it's pretty significant because we're import dependent. It's going to hit us in oil. It's going to hit us in food. Talking on the oil front, if oil spikes because of this geopolitical risk, what's the first domino in the Philippines that could fall in response to this?
Yeah, we already have this call for higher wages and 200 pesos, and uh, this additional pressure on inflation coming from the commodity space could reinforce the calls, wider calls for higher wages, and this could be inflationary. So I think the economic planners are going to be careful on deciding on this. I think they're against it, and I think the important thing really is to lower the cost of living by way of long-term reforms as far as agriculture and energy is concerned, because we are very much import dependent when it comes to our energy supply, our food supply. And so dollar funding has always been critical. And now we're seeing the peso retrace 56.25 precisely because of this inflation pressure coming from the spike in oil prices. Imagine 14% higher over 3 days to like 77 US dollars, Dubai crude, Brent, and WTI. And this, for every 10, our calculation is for every 10% increase in global oil prices, that translates to inflation of about 70 basis points. And of course, the peso dollar also translates to about 30 basis points in case of a 10% depreciation. But we're seeing the peso is stable. That's good for us. Rice prices globally are still low, $397 dollars per ton, and then oil prices moving up not because of fundamentals but because of this sentiment, risk of geopolitical. Because in terms of the fundamental supply and demand, there is still ample supply. Spare capacity in Saudi Arabia is about 5 million 5 million barrels per day, and then they're actually winding up the supply cuts. So more,
Yeah.
and then demand from China is also weak, and government and growth in the US
Yeah,
also
not
weak,
just China, the US as
1.5.
well. So global demand for oil the global demand for oil based on the economies of China and the United States. How would you say that is as we come into this possible conflict between Israel and Iran?
Mhm. I think the worst thing that can happen would be the closure of this critical pathway for the trade of oil, which is the Strait of Hormuz, the Red Sea. If there is going to be military conflict there, and if that becomes the flashpoint of all of these military attacks and air attacks, and there could be disruption there that carries about 20% of the global trade supply, and that could send this is according to Morgan Stanley, like 130 to 130 dollars per barrel of oil. I hope that doesn't happen, because we have seen that happen in 2022 when the Ukraine war erupted. I just hope we see a resolution immediately to this, and that would be in terms of what Trump is saying, that Iran should come to the table, negotiating table, and what the Atomic Energy Agency is saying, that indeed this is not just political, because the Iranian government has actually breached the anti-nuclear proliferation agreement. So they are there at that point when the uranium enrichment is not just for civilian use, but also maybe for weaponry. So that is the key concern.
Yeah, Christina, in terms of positioning, how can investors bet on the resolution of this conflict and how can they hedge against it should it escalate?
Mhm. Well, of course, you have if you're a foreign investor, people are already hedging against the volatility of the dollar. We may also be hedging against the volatility of the peso and the volatility of interest rates. There are instruments in the banking system that can offer clients and corporates hedging instruments in as far as volatility in these two markets, FX and interest rates. In terms of asset allocation portfolio, you may want to go heavy for the defensives, which would comprise your fixed income, maybe in the short end of the curve, and then middle of the curve, 3 year, 4 year, 5 year, and then of course lock in rates also in the long end, but there is some supply issues there. Government is, I think, going to borrow more, and so we have this steeper yield curve. But if you want to lock in the very rich yield of the 10 year and the 20 year and the 15 year peso sovereign bonds, then you can lock in there for safety, for consistency of your yield, and for the regularity of your cash flow. So it's fixed income. And but for those who are very into trading, I think there's very interesting volatility happening in the second half of this year. And these geopolitical events are contributing to the volatility, and volatility will always be your friend. If you know how to look at the trading bands, see where your entry points are and your exit points, but you must be very, very fast in this market.
Correct. Yeah, as we get into the second half, it has gotten interesting. Complicated always. Interesting, yes, because of SEMEPA. The friction cost has eased. The stock transaction tax is now down from 0.6% to near zero at 0.1%. It's clear that, people can move. They can come in and out as they need to even more now. That said, Christina, what's your outlook for this second half?
Mhm. Well, the second half is going to be, as I have said, filled with a lot of volatility because of this new layer of geopolitical uncertainty. There is some kind of a risk off when it comes to equities, and when it comes to fixed income. There's also the threat of inflation. So you see, it's going to be a tricky market, and you should be very vigilant when it comes to what's happening outside, how the policymakers are reacting to it. But it's very good that we have SEMEPA. This is the Capital Markets Efficiency Act, Promotion Act, and it lowers the friction cost, and it's good for traders because the stock transaction tax reduces from 0.6% to 0.10%. And I think that's one of the biggest friction costs when it comes. The biggest is really your commission, and then your 12% VAT tax on commission, and then the SECP, which is small. But this one is the second biggest, I think, component of the friction cost when you buy. It's like 0.6% of your gross selling price. So this is going to lower the friction cost for those that are very much into trading in and out of the market. And this is really going to help boost value turnover, interest in the stock market, but not overnight, because this is really a developmental tool. So this is going to be transformative. I just hope be transformative when it comes to value turnover, liquidity, and then of course
We hope
foreigners
so,
becoming
yeah.
interested also because of the lower
Absolutely,
friction
absolutely.
cost.
When
Yes,
you look
yes.
at the metrics by which markets are gauged, Christina, there's the market cap, there's IPOs, there's value turnover, and there's foreign participation. Here in the Philippines, what's holding us back? Apart from
Mm-hmm.
SEMEPA, what else can we do to really, to bring all that action here to the Philippines?
Mhm. Oh, sad to say, we're lagging. Actually, our IPOs just three last year in Malaysia, in Indonesia, it's 39, it's 37, and then we're lagging also in terms of market capitalization. But I think there are a lot of good ideas from the our beloved BSP governor. He is really batting for the improvement in the risk premium of the economy, risk premium of the markets in terms of this interest rate swap. He has a three wish list that the bond market, the bond yield that we have becomes a bit more real and a bit more representative of what's going on in the market and not dominated by the big players. So he wants to see low-rated issuers come into the market, not only the triple A, not only the super triple A. This is the market that corporate bonds dominated by the triple A'ers. But in Thailand, it's dominated by the triple B. Triple B issuers, low-rated issuers. So our governor would want us also to have a variety of companies getting into the bond market, issuing their own instruments, and then of course our participation in the global ETF. There's this party going on, bond a bonanza, but the Philippines is not in the global ETF. So he wants banks to find out and to discover the opportunity here. So a lot of things need to be done, and I just hope that the market participants get into digging into what is really holding us back, and then seeing the opportunity and getting into the fray. Of course, the PERA funds also is one that is there contemplated and being pushed in the CEMEPA because of the 50 basis point tax credit. Is it 50% or 50 basis point on the tax credit on the part of the employer participating in the contribution?
Looking at the bigger picture, Christina, as investors and traders make their next move, what is one message you'd like them to remember as they come into all of this uncertainty, this period of uncertainty?
Mhm. I think the Philippine economy will continue to grow. We have a very good set of economic planners and economic team, and that gives me a lot of confidence in the way the Philippine economy is being managed. And then our corporates, the balance sheets are very healthy. We are not so over leveraged. And I think we just need reform so that we are able to reduce our dependency on foreign oil imports, energy, and food, and so that our dollar funding becomes sufficient. I think in terms of our debt sustainability and fiscal management, we have a lot of leeway at this point because the economy continues to grow. So it's just that we have challenges when it comes to the deficits, especially externally. And that's really
Yeah.
rooted on the fact that we are heavily importing a lot of the basic. So I just hope that we continue to enjoy these OFW remittances, the pillars of our economy, the consumption-driven led nature of our economy, and are still low unemployment rate of 3.1. And now this SEMEPA that is being introduced, and efforts on the part of the central bank, these are all going to contribute to the development of the capital markets. It's going to be not an overnight transformation, but I think we are on the very
Yeah.
good start for our economy.
And one more economic concern that I wanted to bring to fore, Christina. Our external debt hit 146.7 billion US dollars. That's up 14% year on year. How How sustainable is this? Is this strategic borrowing or is this already over-reliance? What are your thoughts on this?
I think the important thing is our access to capital markets, our access to foreign credit, and the key to that is really how well we manage our fiscal house. We are triple B plus rated, and the S&P is saying we continue to grow, and they in fact said that we may be up for an upgrade, but I don't know if that's going to happen given the challenges that we're facing. But structurally, we are also insulated as far as the Trump tariffs is concerned. It's only 10%. The tariff imposed on us it's only 17%, which is the lowest in ASEAN. And we are also less trade dependent because our exports to the US is just 2.8% of our GDP. And I think we have OFW remittances, we have BPO, they continue to grow. The BSP is saying BPO is going to grow maybe not 7%, but 5%. It's been lowered. Our OFW remittances is facing a challenge, the 3.5% tax that the US Congress is contemplating on remittances. I just hope Philippine negotiators are able to ask the US government to waive that so we continue to
Yeah, that's
receive
going to
all
be
of these
major.
receipts.
Yeah.
Yeah. So in terms of the trade, all of these uncertainties, we are in a position to weather. I think we've seen so many crises in the past, and I think the reforms that we have made would enable us to have the capacity to weather all of these crises.
Yeah, and we'll leave it at that. Yeah.
Externally driven crisis abroad, the war. We don't have a crisis here. For clarification, we don't have a
Yes.
crisis in the field. We are very much on the growth path and on the rate cutting cycle because of low inflation.
All right. Thank you so much, Cristina Ulang, for sharing your thoughts with us
Thank
this
you.
morning.
Sorry, Mikey, earlier.
That's okay. That's okay. All right. Thanks, Cristina.
Thanks, Mikey. Bye-bye.